Welcome to the Techno Fundamental Report for January 25th. Socialism only works in two places: heaven, where they don't need it, and hell, where they already have it. Ronald Reagan. Great quote. Javier Milei, new president of Argentina, desperately wants capitalism. So if you think about Argentina, they've been in hell economically for as long as I can remember, always having hyperinflation. So hopefully we see the rest of the world figure this out. I don't know if they will. You know, this immigration we're seeing is people that are fleeing failed economies, basically. William O'Neill, the whole secret to winning and losing in the stock market is to lose the least amount possible when you're not right. So in other words, when you're wrong, you've got to figure it out as quickly as you possibly can. And you should use a stop loss. William O'Neill's stop loss was 7 to 8%. So if he was down 7 or 8% in a position, he pretty much figured he wasn't right and he was wrong. And so it goes on to say, successful trading is about finding the rules that work and then sticking to those rules. William O'Neill. One of the rules we have is called the 1% rule, which we have talked about many times in the past. And the 1% rule is you never allow any investment to erode your portfolio by more than 1%. So if you have 10% of your portfolio in something and it drops 10% and you're down 1% overall, you have 99% of your portfolio to get the 1% back, and that usually works out. Now, I wanted to mention bonds real quick because, the bear market of 2022, and I was talking to a good friend the other day, and I said, that was one of the worst bear markets I think I've ever experienced. It actually started in December of 20 when Tesla peaked and all the electrical stuff peaked. So we'll take a look at another indicator that talks about this. But anyway, people don't realize how bad the bond market got hit because interest rates went up so much. And so you see here where the 30-year bonds plunged as much as 53%. Well, that's almost as much as the stock market collapsed back in the 2008-09 financial crisis. So what we have to realize here is that, yes, bonds do provide current income, but they definitely have risk. Now, this was a report that came out of a friend of mine sent to me. And the big reason for the higher interest rates has been the inflation problem. Well, this is J.P. Morgan came out with this study. So at the time of the study, which was at the end of October of 21, the inflation rate was about 4%. Now, the average between 03 and 07 has been 2.13, and the average from 2010 to 2019 has been 1.5%. They're looking for, in their projections now, we're not real big on projections, but let's just go with this. The projection is that inflation will stabilize around 2.3%. So why is this important? The stock market historically has done the best in a 2 to a 3% inflation rate. So, the inflation should stabilize. Now, the other talk we're having to deal with here, of course, is the fear of recession. Now, the GDP numbers just came out higher than expected. GDP is up 3.3% in the fourth quarter, much better than expected. Now, we can see here the employment rate hitting new highs, the unemployment rate hitting new lows. So as far as the recession goes, we just don't see it right now. These are two slides that were of a webinar that I attend, and it talks about, investing strategies. It is institutional money that drives the market, and it is this river of money flow where you want to set yourself right into the middle. So part of our strategy is to try to figure out what this large institutional money is interested in, and we'll see them come in as buyers, and we'll talk about that as we see them come in. But very important. Now, this one here says, don't ever let anyone tell you that you can't time the market. This is a giant myth passed on mainly by Wall Street, the media, and those who have never been able to do it, so they think it's impossible. Now, we don't time the market in a traditional way. The way we time the market is through trend following. We identify a trend and we get on it and we stick with it as long as the trend stays constructive. But market timing, where you're trying to predict the future, I agree, it's impossible, because it's impossible to predict the future. Only a God can do that. So we find that a lot of people say you can't time the market, and then we have to correct them and say, yes, you can, but you have to use something called trend following. Now, let's just kind of look at the indexes real quick. I've got 3 of them here. Here's the NASDAQ. You can see new highs. Moving averages are in uptrends. Very constructive. Things look good here on the NASDAQ. Now, on the small caps, we've got somewhat of a double top here, where you've got a high that was set back in the fourth quarter of last year, pulled back here in the first of this year, and, is basically, somewhat of a double top. The small caps need more work to do. Now, the S&P is fine. You can see here, nice, strong uptrend. Really no problem there whatsoever. Now, we'll just take a look at some stocks here real quick. This is just to kind of look at some technical analysis. Okay, big institutional money comes in here. This is called a gap up buy signal. Stock goes into an uptrend. Now, we have, we've all had this difficulty right here in the first quarter so far, but you can see here with DraftKings, again, the big institutional money's coming in. Now, this is also something called a volume cluster, which is 3 to 6 days of above average or high buying volume. So DraftKings chart looks pretty constructive. Here's Hilton Hotels. Now, when you have a stock that breaks out like this, now this wasn't a gap up, but it was just a traditional buy signal. Now, it's following this 10-day moving average very nicely. This is a very consistent, nice uptrend. Here we have Neurocrine Biosciences. This is biotechnology, but this stock is really, since December, has been in a very nice, constructive uptrend. So you want to look for uptrends. Now, also, let me show you how we have this chart constructed. This is a trend meter. Now, the trend meter is not a relative reading against any type of index, such as relative strength. Now, down here, we have relative strength. So with the trend meter, all it's measuring is an absolute trend. Is this thing in an uptrend? So you want to be in the green here. And then on the relative strength, which we're comparing this stock to the S&P 500, you want the relative strength line to be in an uptrend. So you want price is everything. So you want the price to be up, you want a positive trend reading, and you want positive relative strength. So that's how we construct this graph. And we also, of course, look at volume. Now here's ServiceNow, a software company. Gap up here, very high volume. Also, we note that the 50-day average volume has been about 1,100,000 shares a day. So when you see a stock trading more than, let's say, 150% of its average, that determines, whether or not this is institutional money coming in. I can assure you it's not your Aunt Sue. So here we have NVIDIA, which has been super hot, was one of the best performing stocks last year, continues to be a top performer this year. Again, you can see the volume cluster and you can see the strong uptrend. Now, is the stock overextended here? Possibly, because our basic rule is that once we break out from the base, which was right here, we don't want to really pay more than 5% above that breakout above the base. So the base was at 500. So we would say, okay, we'll pay up to 525 for it. So the stock is somewhat extended. So what I would do here, if I didn't own the stock, is I would let it base out again. It will base out again. It'll go through a period of consolidation, then look for another breakout. Now, another stock that we just recently bought, now we own NVIDIA, by the way, Taiwan Semiconductor. This has been a big news item. It broke out heavily on volume. Normally trades 11 million shares. On this particular day, traded almost 60 million shares, broke out, and is in a strong uptrend. So semiconductors really do look like a leadership group. So if you have any questions, please let me know. Thank you very much.